Yeah, we thought this was a really timely point to look at downside risks for sterling, and specifically, what would be the triggers for that. We're not arguing that sterling dollar parity has suddenly become a high conviction view. Equally, I think it's no longer a remote tail risk, and probably most importantly, I think this discussion around parity and further extreme weakness in sterling, I think, is going to be a more prominent feature of discourse in financial markets in the weeks and months ahead. So for us, or for me at least, I think the key point is, the UK is suffering the same pressures as other economies. So what is it that makes us think that sterling is particularly vulnerable? And I would argue that it is the political and policy reaction to this crisis, which I think carry the main downside risks for sterling. So what does that mean? Well, firstly, I think we've seen a change in the reaction function by the Bank of England. They've abandoned this previous policy of more cautious interest rate tightening. Policy gradualism has gone. I think they've been panicked by spot inflation into a more aggressive monetary policy tightening that is not allowing for the lags of monetary policy, not allowing for the time it takes bank rate to actually feed through into mortgage rates, and therefore we're at risk of greater over-tightening in the UK. And whilst you might say, well, wouldn't higher interest rates be a positive for the currency? Well, yes, in normal circumstances, but not if the result of this policy is a policy error which drives the UK into a deeper and more prolonged recession than elsewhere. The second policy failing, I think, is fiscal policy. What we've heard from Liz Truss, the sort of tax-cutting focus, whilst you could make the case for this on a medium-term basis, making the UK economy more dynamic, it seems to do very little to address the main pressure points around this crisis. Cutting corporation tax is not the solution to a recession, which is going to be defined principally by its uneven impact across the income distribution, and with its most severe effects at the lower end of that distribution. Similarly, national insurance tax cuts, yes, they will benefit partly lower earners, but they won't benefit the poorest. And also tax cuts in an environment where consumers are more defensive in a recessionary context. A lot of that money might be saved rather than spent and recycled to boost demand. So at the moment, the fiscal proposals that are out there are just misaligned. They just don't address the most immediate problem. And thirdly, and probably arguably most significantly, I think, is this broader political risk. Firstly, around Bank of England independence. Truss says there will be a review of the BoE's policy mandate. We don't know where this will lead. The commentary around this is pretty incoherent. Policymakers can't even seem to agree about what they think the problem is. Is it that policy's been too loose and inflation's too high? Truss has also been critical of the idea of BoE policy tightening, as this might choke off growth and her tax-cutting ambitions. I think ultimately, changes to the BoE mandate will probably be fairly cosmetic, but markets legitimately will worry about more political interference in BoE independence, and I think this can certainly weigh heavily on the currency. We also, alongside this, have the political risks of the drumbeat of the war drums around the Northern Ireland Protocol. The last thing the UK needs at the moment is a trade war with the EU. Our current account deficit has ballooned already to historically large levels. Ultimately, that current account deficit is what will drive sterling. It's not often the trigger, but I think in an environment where sterling is under more extreme pressure and markets begin to look again in more detail at those UK fundamentals, that huge external deficit is going to be really problematic. So ultimately, you have a potentially toxic mix of political risk, misguided policy, and a UK economy which looks more vulnerable than its neighbours.